Straight from the 2015 Reuters Global Investment Outlook Summit, I'm joined by Michael Corcelli, co-founder of hedge fund Alexander Alternative Capital. Good to see you here.
Good to see you as well.
We used to think that a lot of liquidity is keeping the markets moving along. What's changed? Is it the end of QE in your mind?
It is. The end of QE is one important aspect of it. The other important aspect is the low rates from the excess liquidity has created an excess supply of a lot of key goods in the U.S.
And that would include energy?
That would include energy. Energy being the best example.
So how does that manifest itself in the market? Are you increasingly concerned about certain energy plays, for instance?
I am, especially the energy plays that have borrowed a lot of money, excessive debt. They've leveraged themselves up, and now they have debt covenants that are tied directly to the price of crude oil, and those covenants are broken if crude oil, for example, goes below 70. They're not only going to not be able to make enough money to be profitable, they're going to have to sell assets, stop production, and it has a domino effect on the company's ability to earn money.
So what would prompt you then to actually go out and take a short position, say in an E&P player?
Well, one of the important aspects of taking a short position is to understand who actually holds the long stock, and how low the price of crude is going to actually fall. Crude oil continuing to drift down definitely sets off the signals to short a stock.
So if crude would break $70, is that a sign for you to put on some shorts?
It's dangerously close, and yes, absolutely.
And you mentioned during the summit that you think MLPs are in a bubble.
Yes, MLPs have been very popular over the past couple of years. If you watch the calendar, specifically new issues, the IPOs, the secondary offerings, it seems like there's a bunch of them every single week raising money, and they've raised an enormous amount of capital over the past 4 or 5 years. So I feel that it's definitely the low rates, the excess liquidity has contributed to a lot of new offerings in that space.
Now, I mentioned in the beginning that you are long, and actually you like some downstream names. Valero is a stock that you like. So there is another part of this energy story. What is it about Valero in particular that you're attracted to?
Sure. The main ingredient for gasoline is crude oil. Falling crude oil prices lowers the cost of gasoline to refine. It also causes a lot of distillates at a lower price, which they benefit from as well. So I think the number one reason that I like Valero is the fact that they're going to sell the same amount of product, and it's just going to cost less to produce.
We'll end it there. Michael Corcelli, great to talk to you.
Same here.
Thanks.
Thank you.
I'm Rhonda Schaffler. This is Reuters.